Stocks drift lower after a strong open. Utilities and financial see some gains, while energy and metals are the big drags. Mid-caps fare better. HDFC Bank turns in a stronger than expected growth in deposits in Q4, powering the stock up. Even other lenders like RBL Bank and EU Small Finance Bank turn in a good show. The board of Vodafone Idea will meet on April 6 to consider preferential issue of equity or convertible securities for promoters, kicking off the long-awaited fundraise. Investors will keenly watch what follows next. Gold leaps past $23 per ounce as short, $2,300 per ounce as short covering powers the yellow metal up in the face of buying by central banks. Laggard silver too scales to a 26-month high.
Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra. Ekta, it's Thursday. It feels so topsy, right? Because the Nifty, which was in a range of 22,350 to 22,550 at best, the extremes of that range were tested today. On the way up, 22,600 is what we crossed. And on the way down, 22,303 has been today's low. So it's been all over the place. But despite that, one would say that it's still in that range.
Hi, Manglam. Yes, overall, you'd have to say that it's a quiet day. It's consolidation at this point in time. We have obviously the mid-caps, or rather the Nifty Bank, which is doing better today, and that is courtesy HDFC. But the big cue to watch out for is definitely what is happening with the MPC. So we have the Powell speech, which is now out of the way. So they have indicated that they need more evidence on inflation easing before cutting. So that's the word coming in from the Fed, which is the latest comment which the RBI will probably take cognizance of. And separately, we do have maybe the commodity price rise when it comes to Brent crude gold, something that maybe the RBI would also take cognizance of tomorrow. So I think that would be the key event to watch out for.
Absolutely. So let's take it straight then to a bunch of stocks which are doing well. It's the Nifty Bank which is outperforming. HDFC Bank is doing extremely well. Let's talk about that itself. The top Nifty gainer, strong deposit growth coming in, Abhishek.
Well, Manglam, that deposit growth in value-wise is perhaps very robust. If you take a look at the environment in the deposit trend that you are seeing in the banking sector, deposits are up 7.5% quarter-on-quarter. In absolute value, it's up 1.66 lakh crore on a sequential basis. That is 4 times the growth that they saw in Q3 itself. And it's like, if you compare Q4 of FY23, that was at 1.5 lakh crore when the environment was good or the liquidity conditions were good. CASA is up almost 9% quarter-on-quarter. CASA ratio has improved for them on a sequential basis. Retail deposits, that's been a factor that has led to this deposit momentum. It's grown at 7% quarter-on-quarter. Advances growth are at 1.6% quarter-on-quarter. Domestic retail advances grew by 3.7% quarter-on-quarter. Commercial and rural banking grew by 4.2% quarter-on-quarter. What impacted the overall advances growth this time around was other wholesale loans, which actually declined by 2.2% quarter-on-quarter. So the CD ratio, that's declined sharply to 105.4% when compared to 111.5% in the previous quarter. Back to you.
Okay, well, that's not all. Abhishek, you have a lot of other banks that you're watching out for in terms of their updates. Tell us more.
Well, AU Small Finance Bank over there, the strong business momentum has continued this time around as well. And however, COF, that is cost of funds, continues to rise. Deposits are up 25.7% YOY and about 8.8% sequentially. The CASA is up 10.1% quarter-on-quarter. However, CASA ratio has declined to 33% versus 33.9% in the previous quarter. AM growth is healthy at 28.25% YOY and about close to 8% sequentially. The cost of funds has inched up a bit to 6.98% when compared to 6.9% in the previous quarter. Suryodaya Small Finance Bank, robust business momentum. Take a look at deposits. That's grown nearly 20% quarter-on-quarter and about 50.5% on a YOY basis. CASA has, in absolute value, has grown by 30.7% quarter-on-quarter. So the CASA ratio has improved to 20.1% when compared to 18.5% in the previous quarter. Disbursements are up 30.6% sequentially, with which has meant that the AUM growth is robust at 13.8% quarter-on-quarter. Asset quality has improved a bit. Gross NPA ratio is down about 10 basis points on a sequential basis. RBL Bank, again, deposit growth is pretty solid over there. Deposit growth of 21.9% YOY is perhaps the highest that you are seeing in last 3 years, and 11.5% on a sequential basis is perhaps the best that you are seeing in last 5 years. CASA has grown by 16.3% quarter-on-quarter. CASA ratio has actually improved on a sequential basis to 35.2% when compared to 33.8% in the previous quarter. Advances growth 19.2% YOY is perhaps the lowest growth that you are seeing on a YOY basis in last 3 quarters. However, sequentially the advances have grown by 4.5%, which is a good sign. CD ratio has declined sharply by almost 550 basis points on a sequential basis, which could mean there could be some pressure on the net interest margin. Let's wait for its results to show whether net interest margin has come under pressure or not. Back to you.
Right, Abhishek, thanks a lot for that. So that's about all things taking place in the banking stocks, right from HDFC Bank to the ones that Abhishek spoke about beyond that as well. Vodafone Idea is the other one which is in focus. The stock's been buzzing around for a while. The board is meeting on Saturday. That's April 6th to mull fundraise from promoters. Rima joins in with more on that. Rima.
Thanks so much for that. So as you pointed out, the Vodafone Idea board will meet on Saturday, 6th of April, where they will consider issuance of equity or convertible securities amounting to 2,075 crore rupees on a preferential basis to one or more promoter group entities. Currently, the company has 2 promoter group entities. One is the Aditya Birla Group and the other one is Vodafone PLC. This follows a board approval that the company got in February, where the board said that they are looking to raise 20,000 crore rupees via equity-linked instruments, and thereafter, just 2 days back on 3rd of April, they got the shareholder nod for the same. Now, while this 2,000 crore plus of a promoter fundraise, which is expected, is a step in the right direction, as it gives external investors the confidence about the promoters' commitment to the business, the fact that the promoters have their skin in the game, and it will help in raising that external fundraise. Remember, the news doesn't come as a surprise, because the promoters had committed to a 2,000 crore of an equity infusion way back in August of 2023. So in that sense, it doesn't come as a big surprise. Now, moving on, the question is, why does the company need the money? Well, immediately, Vodafone Idea's cash flows are under control. Its estimated liability is close to about 4,000 crore rupees, while Kotak estimates that the annual cash flows will be in excess of about 8,000 crore rupees. So immediately, the company doesn't need cash. But going ahead, over the longer term, the company needs capital for 2 key reasons. One is regulatory payouts, especially after the moratorium on the AGR payments get lifted in FY26. And then it's big sums of money that Vodafone Idea needs to pay out. We're talking about 28,000 crore rupees. This is in billion, 28,000 crore rupees in FY26, going up to 41,000 crore rupees FY27 onward. So that's reason number one, that once the moratorium lifts, the company needs big money. And secondly, it needs to get started on its 5G rollout. Its capex has been lagging. Just to give you a number and put those numbers in context, in Q3, the quarter gone by, Vodafone Idea's capex was about 330 crore. Paltry, compared to, say, a Bharti Airtel, which was 6,500 crore rupees, and plus players like Bharti, Vodafone, Jio have completed their pan-India 5G rollout. Now, the view is that for Vodafone Idea's competitive survival, a fundraise is critical. But the question is it going to be enough? Well, according to analysts, it's going to need more than that. A sharp tariff increase from here on and periodically, and maybe some waiver from the government also, because out of its total debt of 2.15 lakh crore rupees, a bulk of it, 2.07 lakh crore rupees, is what it owes to the government. So is there going to be some government waiver on the horizon? And one risk which shareholders need to keep in mind is that if the government does decide to convert part of its debt into equity, then it could result in significant dilution for the existing shareholders. But for now, all eyes are going to be on Saturday, the 6th of April, where the promoters of Vodafone Idea will commit to a fundraise of about 2,075 crore rupees. And the question is, will it lead to immediate external equity fundraise, which what the company needs so badly? Back to you.
Okay, all right, Rima, thanks very much for that. So Vodafone will get to know more details on Saturday. The stock will be reacting to it on Monday. Well, some other stocks on our radar, Hindustan Zinc and Vedanta, these stocks are buzzing in trade on the back of a BSE notice that the aluminium refining capacity has expanded. Nigel has more details on this.
Well, that's right. Hindustan Zinc as well as Vedanta should be on your radar. The reason is that commodity prices globally have surged up, whether it's zinc, aluminium, crude, silver, all of them have moved up. And the play is really Vedanta because they have some exposure to all these commodities. Now, Hindustan Zinc has exposure to zinc as well as silver. Now, the news overnight was that Vedanta has gone ahead and increased their alumina capacity by around 1.5 million tons odd. Now, that's good news for them because they'll get their alumina from their backyard itself. And they have already planned that the total alumina capacity will go to around 5 million tons. The reason that we're tracking the stock for today itself is because the dollar index has cooled off and also silver prices have moved to the highest levels we've seen in the last 2 years or so. Why is silver important to Hindustan Zinc? 20% of their revenues come from there, 45% of their EBIT comes from them, and their margins on the silver business is 85%. Why is that? Because it's a byproduct of the other businesses. Now, Hindustan Zinc has very limited float in the market. 65% is with Vedanta Limited, 30% is with the government of India, and the institutions as well have 2.5% stake. So the float in the market is only 2%. So Vedanta would be the more liquid name because it has stake in Hindustan Zinc and also because it has exposure to other commodities. So that's the reason why we had highlighted the stock earlier today, and that's why it could be on your radar, provided this entire metal rally continues. Back to you.
All right, Nigel, thanks a lot for that. So that's about a couple of these metal names. UPL is one of the stocks which has now spiked. Suddenly, it's up around 1.5%. It's, up around 2.5% from the lows and was in the red for most part of today's trading session. So the intraday chart of UPL comes up for you. This, even as the mid-cap index has moved briefly into the red, the frontline index also, the Nifty, around that 22,400 mark. We take a short break, but as we do that, here's something that you must not miss out on. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market. We'll be mapping the macros with Citi India economists Sameer and Chakrabarti, a jugalbandi between market veterans Manish Shokhani and Ramdev Agarwal. Return of the animal spirit will be one of the discussions that we'll have within India Inc., a conversation with V. Vaidyanathan of IDFC First Bank, K.K. Misni and Manish Kejriwal of Edara Capital as well. For all the market enthusiasts chasing alpha with market experts like Nilesh Shah of Kotak, Prashant Khemka of White Oak Capital and Anish Tawakle of ICICI Pru MF as well will be there. So for all of this, stay tuned to CNBC TV18. Tune in today evening, particularly 5:30 p.m. onwards for India Exchange.
Well, overall, it is quite quiet for the markets. Nifty is down around 47 odd points. We have the mid-cap index, which is down around 100 odd points. So let's see whether there's any kind of recovery. As of now, the advanced decline ratio is holding almost even keel. So maybe that graph should come up for you, and let's see how that is currently panning out. Around 2,100 stocks advancing to around 1,600 stocks declining. So it seems as though that crisscross could probably take place sometime soon. But let's put the focus on Mayur Uniquoters. The company expects 20% revenue growth over FY25 to 27. They've also guided to improve margins further. To discuss this and the demand situation, we have with us Suresh Kumar Podar, who is the CMD and the CEO of the company, joining in. Mr. Kumar, thank you very much for taking the time out. Well, I was just going through the transcript of your previous quarter, where you have indicated that you all have been selected and received good orders for some, OEM suppliers for some new models in the export as well as the domestic market. So I just wanted to understand what is the current situation when it comes to the order book in the automotive segment, both for the exports as well as the domestic market, and what is the trend looking like?
So far as export market, OEM, automotive, in next 3 years, first year, we expect at least 18 to 20% growth, and then next 2 years, 30% minimum growth. As per this, I'm talking as per orders in our hand. I mean, model to model, they will introduce like that, I am saying. And so far as domestic automotive, OEM, and replacement market is concerned, this year, next 3 years, we feel CAGR of at least 10% increase.
All right, so that should be good. You know, if I'm looking at the first 9 months of this year, the revenues have been virtually unchanged at around 582 crores. You had earlier given us revenue guidance of 900 crores for FY24. So just wanted to understand, where will you end FY24? And would you give us some guidance for the overall company for FY25 and FY26?
You see, this year, you know, as the government has introduced BIS specification in a lot of material and especially footwear. So footwear from last 3 months, it was down a little bit. But other areas are doing good business. But you will see there will be no effect in profitability that should increase. That you will know in the month of May when we come out with the yearly report.
So next year we can expect revenues closer to 800-900 crores, or you are looking at 1,000 crores as you had earlier guided?
Yes, more than 900 crores.
More than 900.
Okay. All right. So, you know, there was an expectation that an order from BMW based on their new models should probably pick up for you and maybe even start in April of 2024. That's what you had indicated, at least post Q3. Where do things stand? Because the volume was supposed to go from, say, I think 4,000 to 40,000.
Yeah. So it has started increasing already from this month onwards. And this 40,000, which I said, that will be from June. I mean, every month it will increase. And by June, it should come to 35 to 40,000.
So how much has it risen right now from 4,000? What is it currently? And the peak would be 35 to 40.
You see, it is increased to 6 to 7,000. You see, it is all depends on how they are producing their new models for which they have given me the orders. Now, whatever I am telling you, it is according to their indication, OEM's indication. It may reduce or it may improve, but not much difference. Maybe 5-10% here and there. Because whatever we are saying according to the projection of our automotive companies which they give us.
All right. So by FY26, your exports should be close to around 600 crores. Just wanted to know the PU plant. What is the utilization right now? You've been talking about that, you know, having a potential of over 100 crores in the past as well. By when do you reach there?
This is a very difficult question. As you know, last time also I have said, there is a big problem in under-invoicing, which is going on. We managed to increase 10% excise duty. We managed to put up 46 cents anti-dumping duty. But still people, you know, they are showing quantity difference. They are showing PVC instead of PU. So now what we have done, of course we have to fight. And the government is also becoming strict. So now what we have done, we are approaching now to the big multinational brands. Like we are working very seriously with Jara, and then Tata Motors, and then Puma. And already we have submitted the samples to them, and we expect a good business in near future, where the margin will be also good and the material will be supplied all over the world, gradually, you know. So, because the way footwear is moving in India, we cannot depend too much on Indian market, you know, so far as price is concerned, so far as profitability is concerned. So we have to move outside, we have decided, and we are moving. And they have all three of them has visited our factory in Gwalior, and they are very happy. We have given more than 100 samples to them, and they will start business, I think, from Jara. Already we have started a little bit, and I think within next 6 months, these three we will get a business. And generally, I can tell you that
Right.
I hope minimum 50% increase every year in new business.
Okay. Okay. All right. Fair enough. What exactly are the realizations like on a consolidated basis? If you could share that with us in terms of year on year as well as Q on Q, what is the overall consolidated realizations on a blended basis?
Yeah. Generally, we have uh, before tax, as you can see it is 17-18% before tax. And it is more than that. I'm telling you a little less. And this will increase because, you know, OEM export is increasing tremendously. There, the markup is also high and the profitability is also high in OEM exports. And whereas I told you that we can get 30% CAGR from second year.
Right. Just final question, sir, from my end then. You launched your own brand in India, Texture and Hues. How do you plan to sell it? How do you plan to scale this? What are the targets here?
See, branding is not easy. It takes time, right? So at the moment, we are working to make maximum dealers. In last 1 year, we have made 800 dealers all over India. And we had 4 wholesale distributors already we appointed. 2 we will appoint soon. And by the end of this year, we will have 10 distributors. So now distributors are also appointing dealer. We are also selling through dealers directly. And it is showing good result. And you see, as you know, it takes time. And today I'm not going for any advertisement or anything because first of all, I want to establish the dealers that if some customer goes and asks for Mayur material, he should get it. So my target for this year is just to increase as much dealers I can increase. And I'm seeing that at least 50 to 60% growth will be there every year, at least for 2 years. After that, maybe more,
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Mayur Uniquoters. That stock is marginally higher today, up around 2%, but in a weak market, at least for the broader markets. We'll take a short break, but Aditya Agarwal will join in to discuss the technicals. We'll ask him some strategies on the financial space as well. Stay tuned.
Just keep a close watch on the market. The advance decline ratio is now narrowing once again, split right down the middle. It's been, pretty close to each other, both the red and the green lines through most of today's trading session. The Nifty down around 50 points, Sensex by about 50 points as well. It's the Nifty Bank which is doing extremely well. So as you can see, the advance decline tells you the story of the broader markets. But it is, of course, the weekly options expiry today on the Nifty, and Nifty has been tested at both the extremes, both slightly higher than the above range and slightly lower than the below range. So today's high and today's low gives you a wide range of the Nifty to track. 22,619 is the record high that the market hit today. Thereafter fell almost 300 points from the day's high, went all the way to 22,304, and from there it's back up to 22,380 thereabouts. So that's the broad range that the street is looking at ahead of the big events tomorrow from the RBI. Nifty Bank and the HDFC Bank stock look pretty much in tandem with the up move that we're seeing. The Nifty Bank is higher by about 0.5%, 0.6% now as we speak. And it's the HDFC Bank stock which has taken it higher. We've been talking about how HDFC would be the stock for this week, given its weightage on the important indices and the awaiting of the fourth quarter update that has come by today as well. For the Nifty, 22,500 call writers extremely active, hoping for the Nifty to not cross that 22,500 call for the bears. And at the lower level, the bulls believe that 22,300, which is closer to today's low, will of course be in focus as we will see some support once again out there. Stocks in focus, we have Exide, which is seeing a lot of long positions being added. And on the short side, India Mart is something very interesting because the open interest is up nearly 20-25% for a stock which is down 2%. So a lot of short positions built on that counter. Ekta.
Okay. Okay. All right, Mangalam. Thanks very much for that. Aditya Agarwal joins in to discuss the technicals of the market now. Aditya, hi. Welcome to the show. First, wanted to quiz you about what we are seeing in the financials. Yes, a lot of it is probably news-based because of the Q4 updates. But how would you approach a stock such as HDFC Bank and the Bank Nifty as a whole?
Good afternoon, good afternoon, Mangalam. Thanks for having the show. Clearly, it's because of the HDFC Bank that the Bank Nifty is charging ahead, and HDFC Bank has led that rally in some other small private banks as well, even though they have also reported good set of business numbers. If we talk about HDFC Bank in particular, just as a disclaimer, this is one stock which has been recommended to our clients as well, Ekta. We believe the stock is still has some more momentum on the upside. The risk to reward definitely now is not that much in favor of going long, aggressive long maybe, which there was last week, but still I believe there is decent upside left in the bank. On the upside, it can immediately test levels of 1560 to about 1600. So the upward momentum which has started in HDFC Bank this week, I believe is likely to continue in the coming trading sessions as well. And I wouldn't be surprised if it crosses 1560 and marches on to 1600 odd levels, because this has been an underperformer within the banking space as well, and which is why the Bank Nifty has been underperforming in line with HDFC Bank as well. Having said that, the Bank Nifty has to cross above 48,000 odd levels. If it does so, then I believe Bank Nifty 2 can scale past its previous peak, which it hasn't done for some time now. While Nifty continuously makes new highs, Bank Nifty hasn't been doing so. But I think the time has changed, maybe driven by HDFC Bank. Bank Nifty 2 can scale past levels of 48,700, 49,000 levels can be tested in the coming trading sessions. So overall, I believe the Bank Nifty is in a healthy space along with HDFC Bank, which could actually take the Nifty also maybe higher, if not significantly higher, can also arrest the fall on the Nifty as well. So overall, I think Bank Nifty and HDFC Bank are the two focus areas for the market participants.
All right, Aditya, your stocks, what do you have apart from Bank Nifty and the HDFC Bank stock?
So I've got a buy and a sell, Mangalam, because of the way the markets have been choppy and volatile. Buy is in Ipca Laboratories. Stock has posted a good breakout after a consolidation phase, and it's backed by healthy volumes. Despite the fact the markets are choppy, stock is holding strong. So I believe it's a good idea to take long positions in Ipca Laboratories for a target of 1350 on the upside with a stop loss at 1200 on the downside. I've got a sell on Apollo Tyres. This stock has started forming lower lows, lower highs, and in trade today it's broken down from its key support areas as well, which is a trend line support as well. So on the downside, stock can test levels of 435, 430. So I would recommend a short on Apollo Tyres for a target of 435 with a stop loss at 472 on the upside.
Okay, all right, Aditya, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals of the market. We need to take a short break as of now with the Nifty at 22,404. So back to those levels. We'll take a short break. Up next, we'll focus more on stocks, and we have a conversation lined up with Knight Frank as we progress on the show as well. Stay tuned. Welcome back. It's quiet for the market. So let's get discussing about the real estate space. Let's put the spotlight on the real estate sector. According to property consultant Knight Frank India, there is a significant surge in the office-based transactions across the top 8 markets in India. Home sales have also surged by 9%. year on year. To discuss this and more, we have Ghulam Zia, who's the Senior Executive Director at Knight Frank, who joins in. Ghulam, hi, welcome to the show. Well, you just came out with this report, India Real Estate, the Office and the Residential Report for the Jan to March quarter. And that's indicated that there's been a significant surge in office space transactions across the top 8 markets, marking, I think, around a 43% year-on-year growth, if I'm not mistaken. That's quite significant for the office space segment. Do you think that that's probably because of a low base, or is this trend here to stay?
Thank you so much for inviting us to talk about this report we have released just a short while back. And focusing on commercial market, yes, the trend has been the growth in last couple of years. In fact, after COVID, at least a year or so, there were serious concerns on how office market is going to look forward after the work from homes, etc. But last year, we saw one of the best office market absorption, which was the last calendar year, almost touching the pre-COVID levels. And this quarter is the highest quarter historically, with about 16 plus million square feet of office space absorbed in just one quarter. And especially quarter one is normally not as good as the rest of the quarters, but this quarter itself has given the best of the performance. So overall, while growth is happening, Indian economy is growing, Indian-facing businesses are growing, GCCs are growing. So we don't see any reason why this year would not be historic best, much better than what we have seen last year, or even for that matter, pre-COVID. So we are geared up for a year which would be historically best absorption numbers for office space.
Right, so that's about the office space. I'm looking at all the other numbers that have come by as well for the first quarter. Residential not doing too bad as well. 9% growth is what we've seen in the first quarter. But out here, what's interesting is that on an average, the growth has been a lot higher. It's been skewed downwards by Bangalore. I'm looking at Mumbai, 17% growth in the first quarter. We have a 14% growth in Pune, 15% growth in Hyderabad. Chennai too has grown in high single digits. The only two geographies which have lowered the overall average, one is NCR, which has grown at just 1%, and the other one is Bengaluru, which has fallen by 2%. Can you tell us what happened here? Because there was no dearth of launches here either.
Well, let me start with NCR. In NCR, something else which is also there in those numbers that you are right now talking about. In NCR, the upper end of the market has doing exceptionally well. We're talking about 1 crore plus kind of transactions that we are tracking. About 66% of the transactions in NCR in the upper end, which meant that the lower end has not been performing. So when we look at the lowest end, I'm talking about below 50 lakh kind of a ticket size, is one segment which has been suffering big time for various reasons, supply side concerns as well as demand side concerns. And if that had to perform, there was no reason for NCR also to do as good as the rest of them. So simple, as far as NCR is concerned, the premium market is absolutely going berserk. Large number of transactions are happening, but it's not good for the overall volume. That's on as far as NCR is concerned. Now, Bengaluru, 2% of a reduction, I would once again say, let's not read too much into it. I would rather wait and watch for a certain longish period, because long-term weighted average numbers are rolling averages about what we would look at. A 2% blip is not something which I would be too unduly worried about. While a lot of them are trying to connect it to the water situation on ground, etc. But I would say hold back. It's not something to right now write off that city for.
Okay. What is your expectation in terms of growth in the residential market going into the remaining part of this year or FY25? Do you expect it to be as buoyant as FY24, or do you see any kind of headwinds?
Well, the only concern I would talk about is the election. Now, election itself may not have an adverse impact, because historically we have seen earlier also, immediately after an election, the bounce back is phenomenal. And that's what I would also look at. But that said, even now, the kind of numbers that are coming, we are watching month-on-month numbers. Like in case of Mumbai, we saw registration numbers were outstanding, with almost about 90,000 apartments, 16,000 apartments sold, etc. These are numbers which are perhaps month-on-month improving. And those numbers are still giving us another story, which is the market is here to stay. So the overall perspective, in spite of a possible concern due to election impacting the number of sales or volumes, but long term we don't see much of a concern. What I just short while back spoke about, the lower end of the market not performing well is the sole concern for me. Because while we spoke about NCR a short while back, that while premium upper end of the market is doing fabulously well, it needs to be supported as far as numbers are concerned coming in from the mid to lower end of the market, which remains a concern. Which can change if the government brings in some kind of an incentive for the lower end with some rebate for the home loan interest rates. Home loan interest rate has impacted the lowest end the worst.
Right.
So overall concern is only that. Otherwise, the market is looking good for the rest of the quarters.
Let's hope that comes about. We've seen signs of recovery at the lower end of consumption from consumer staples, etc. If this sustains going forward, maybe it moves higher at low-ticket houses and all these others as well. Ghulam, final question from my end before we let you go. You've spoken about the top 8 cities in India. Are there any other centers which are emerging as real estate powerhouses where a lot of investment can go? Any early signs of some geographies which are emerging as big wealth creators or potential wealth creators out there? And I also see Chennai, which has suddenly picked up in terms of volume. So the non-traditional markets are doing well.
Indeed. First of all, let me single out Chennai. Chennai is not really a non-traditional. It has been traditionally a very established market. Had suffered due to a few of those natural calamities like tsunamis, etc. But now bouncing back. Now talking about the rest of them, I would say a lot of these centers are growing because of wonderful infrastructure falling in place, be it roads or airports, etc., etc. So like recently, we've been talking about Meerut. Meerut is one place because of high-speed rail connectivity to Delhi has been growing fabulously well. Similarly, there are centers like even due to the Ram Mandir opening, that entire Lucknow and Ayodhya belt is doing phenomenally well. Similarly, there are a few other centers like in case of Mysore, the road is improving. Mumbai-Nagpur Expressway opened up. So a lot of those new places, new cities, which are finding a great momentum because of infrastructure improvement. So I would say let us focus on those cities where infrastructure is growing.
Okay, just quickly before we let you go, Ghulam, I just wanted to narrow down on global capability centers which have seen a surge in Hyderabad and Bengaluru. Are you seeing that trend continue as strongly as we have seen in FY25? And has that resulted in a price appreciation as well?
Positively, the price, let's start about the price trend. What is GCC? GCC are the very upper end of the outsourcing global capability centers when many of these banks, NBFCs and big corporates are setting up their own research centers for their own internal requirements. That is what GCC is all about. And that requires retention of very high end of resources. And then it is not just salary or packages or cost to company. It's also a lot to do about the real estate, the quality of the offices that you are providing to your people. And that's where the rents have also started going up. The GCCs and then about regions, Bangalore and Hyderabad, you have best of the resources to do high-end research, and that's where it is starting. But it is obviously spreading into other cities like Chennai, Pune. Even Pune is getting a lot of focus from GCC. So rest of the cities of the country will also not lag behind. But as you rightly said, started with Hyderabad, we started with Bangalore, now in Chennai, in Hyderabad. So this is something which will give an impact on overall price improvement as well. The rental rise also will happen because of GCC spread in times to come.
Okay, all right, Ghulam, we're going to let you go on that note. Thanks very much for joining in and speaking with us and talking about the real estate market and also giving us details about the office market, which we generally don't talk about as much. Well, we'll take a short break, but we have an announcement to share with you all before that. We're launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's a lot to learn and lots to do. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to CNBC-TV18.com and we'll see you on the 11th of May.
Welcome back. Vedanta has surged right now. Vedanta has moved to the high point of trade. Of course, they had released their production data, etc. The metal stocks doing well. Nigel briefly had told us as well that these are best placed stocks to benefit from the rise that we're seeing in a lot of these commodities. But the stock has suddenly taken notice of that and up around 3.5%. We're seeing a decent move on a bunch of these other indices as well. The Nifty is back into the green, back closing in towards that 22,500 mark, and it's led higher by the Nifty Bank, which is holding above that 48,000 mark with a gain of almost 400 points. But one of the stocks in the broader markets which have been surging right from the word go has been KEC International, backed orders worth nearly 816 crores from across businesses. We spoke with the managing director and CEO Vimal Kejriwal. He spoke about the company's order inflow and the outlook. Let's listen in.
We had talked about 20,000 earlier, then we had said 18 to 20. Fortunately, at least we have crossed the lower level. We have reached 18,100. We have roughly around 5,000 crores in L1. A couple of them have got hit by the election code of conduct. So they are with PGCL and other people, which we were hoping that they will be released before the election, but it's not been released. So that's the slight setback. But I think we are okay otherwise. For next year, we are talking about around 25,000 crores of order intake. Margins for next year, we have just been talking about between 7.5 to 8. And we have said that FY26, we should be between 9 to 10.
Okay, so that's KEC surging in terms of price and volume action. We need to take a short break, but here's something that you must not miss out on. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market. Mapping the macros with City India economist Samaran Chakrabarti, catch a jugalbandi between market veterans Manish Chokani and Ramdeo Agarwal, return of the animal spirits with India Inc., a conversation with V. Vaidyanathan of IDFC First Bank, Keki Mistry and Manish Kejriwal of Kedara Capital, and chasing alpha with market experts like Nilesh Shah of Kotak, Prashant Khemka of White Oak Capital and Anish Tavalke of ICICI Pru MF. Don't miss out on this. Tune in to CNBC TV18 this evening, 5:30 p.m. onwards.
Welcome back. It's the season of quarterly updates, and we have one coming in from Dabur. The stock is down by about 2% because the company said demand trends remained sluggish during the quarter. But there are a couple of positives from Dabur's numbers as well. One is rural growth picked up, fueled by price rollbacks in staples. And as we move forward, the gap between rural and urban are narrowing. They have a positive outlook for the remainder of this year. For the fourth quarter, their revenue is expected to grow in mid-single digits, also because the Badshah acquisition is now in their base. The home and personal care segment grew in high single digits. That's a positive. It's the healthcare and F&B segments which were impacted. F&B because of a high base, healthcare because of a delayed winter itself. They expect gross margins and operating profit to grow higher than the revenue, and as a result of which the net profit will be higher as well. They expect the future to be a lot better. So let's see how that pans out too. So that's about the India business, and there of course will be some pressure on their international business due to the currency depreciation. But that's about the equity space. Let's go across to Manisha for all things commodities.
Thank you so much for that, Mangalam. And let's welcome on board Jonathan Barat, who's CIO of Probus Securities. Jonathan, hi, welcome to CNBC. And how are you looking at the gold prices now? Because there is a bit of a mystery on who's buying in what quantity for the gold prices to be where they are.
Absolutely, Manisha. Good afternoon and good to be with you. Look, it is a bit of a mystery as to who's buying. We can't say it's just generally the weaker US dollar or there are other macros, but we get a sense that we feel that the main buyers are sort of central banks are coming to the fray, or those economies which have been sanctioned by the US, where they actually need some currency because they can't use their US dollars. So we think the main buyers are those countries, and that they just want to increase their reserves of gold, and that just is propelling the price.
So, Jonathan, how much would you think that the central banks have bought for the month of March? I mean, we have the Feb figures and that has been factored in. Much of the fundamentals and the forward-looking situations or sentiments has been factored in as well. But this $50 of a up move every single day and 8 straight days of record highs, how would you look at that?
Well, I think it's quite interesting because when you look at the central banks that are involved, we know that China's involved, we know that Russia's involved. There are also some large Russian companies also involved. I think there's a general concern that if things start to escalate, whether it's in the Ukraine, and if that starts to escalate with Russia, more sanctions will come in. And as a result of that, then they need this hard currency. So you are right. We're seeing a lot of gains. Can it continue, I think, is the key. But I guess if you've got a lot of funds there trying to buy, chasing what's not there, the prices can continue to trade higher.
Yes, 2,300 was a target for the year end, and we've seen that happen in the first quarter, the first 4 months of this year itself. Where do you see? I know it's overbought, the momentum still is on the higher side, but how much higher from here?
Look, I think that's a good question. I think, as we know, 3,000 is a big level. I don't think we ever really anticipated to get to there. But I do look at gold, but also look at silver as well, because silver really hasn't moved as much. We're about $25 off record highs. So if the appetite for purchases of gold for those companies and central banks changes to silver, then we could see quite a rally in silver as well. But yes, I think very hard to say, but in a market that goes to record highs, you can only take profit, but I certainly wouldn't go short.
All right. I know last year the prices also saw levels of 1,800 or thereabouts. Where would you say a strong support coming in now?
Oh, look, it has to be just the previous highs we've had. Very hard to say. We know 2,500, 2,250, 2,000. They're all levels which we've seen and we've looked at before so many times. What that resistance now becomes support. And whilst that, look, in a market that is long and getting longer, the more we go to records high means the correction is going to be just as ferocious. We can have limit up days and then we can have limit down days as well. So expect the volatility to be there, but the buyers, if they're still there, it'll keep going higher.
You just mentioned that silver is another one to watch out for. So with gold having done what it is done, any new money do you see coming in for silver now?
Well, look, I'd expect so. I think this is one of the interesting things about the movement for gold, that we're seeing record highs. And the record high for silver is up around that $50 an ounce. We're still trading around 25. We had a very large chart point at about 25.50. When you look at that silver, it has gone past that. So we are in breakout territory for silver. And if it gets a little bit of that momentum sort of from gold, then the chances are that silver should have a good run from here. Let's hope so, because it's got a long way to go before it gets to a record high.
Jonathan, also, how much of this would you call froth? Or, are you concerned with these dizzying heights in prices of gold especially?
Well, look, I think we are all concerned because the price has been so volatile and directional. We do think it is obviously a market player. Do I get concerned? Well, if I was a producer, I think I'd probably open my hedge book at this level because in my mind, you're going to be securing some very good returns that you have never seen. So as a producer, open a hedge book because I think that'll lock into some really good prices for them. Because as we know, there's a lot of volatility there. Can it keep going? I don't know. But I would certainly think that at some stage it will have a very savage correction.
All right. Also, what would you suggest the investors from here on? Should new money come in, even if it is for a longish investment period of 3 to 5 years? Are these good levels to go long in gold?
Look, I think given the macros that we're currently seeing at the moment, we're shying away from inflation. I think I would be keeping my powder a little bit dry and looking for a market that can consolidate its gains. And that it can consolidate its gains so then it can start to move on from a good footing. If we look at the macros, sort of like 2 to 3 months ago, we're coming off inflation. The US dollar is relatively steady. They're not the real reasons to actually say we should be buying it. So this is where we think it's market-induced, this move. So new money, if I were to get into the markets, I would be looking at silver rather over gold. In gold, I'd probably be saying, look, I'm quite happy to take some profit here.
Okay.
Okay, all right, Jonathan, as well as Manisha, thank you very much for joining in and talking about the one topic which is definitely hot and continues to get hotter. That's gold and precious metals. We need to, on that note, wrap up on Halftime Report, but Business Lunch will take all the action forward. Stay tuned.